1 minute. Hi, good afternoon, everybody. This is Sunil Subramaniam, Managing Director of Sundaram Mutual Fund, and as already publicized, we are having this questionnaire on our new fund offering, the Sundaram Flexi Cap Fund, which opened for subscription on the 16th of August and closes for subscription on the 30th of August. We've received an overwhelming response to the NFO so far, and collections are well on the way to making it one of our largest new fund offerings in Sundaram's history. In that context, I'm sure all of you would have seen the massive visibility campaign that we've been doing across the television, digital, hoardings, and the newspapers. And the number of questions that have come in ahead of time indicates that the visibility campaign has indeed worked, and a lot of you have sent us questions. So without much ado now, let me step into answering a bit of these questions. I know there are a lot of you who are live on the program, and you can also post your questions on the chat, and my team here will ask me those questions if they are different from what I've already answered over the next 15 to 20 minutes. So let me kickstart without any further delay. Where are the funds invested and what proportion? So the funds will be invested in a multi-cap scenario. That is, at all points of time, it will have something in large cap, something in mid cap, something in small cap. The selection of large and mid and small will also happen based on the sector outlook that the company has at this point of time. So to that extent, it will also be a multi-sector fund in addition to being a multi-cap fund. The proportion of large cap, mid cap, and small cap would vary based on the growth potential that stocks in each of those segments and sectors looks like coming through in the coming years. So we'll use a 1 year forward price earnings ratio, right? So what is the current price, stock price, and what is the expected earnings will be the way that we will be looking at the mix of large, mid, and small. And depending on which is perceived to be overvalued, we will take a lesser share of that, and which is perceived to be reasonably valued, we'll take a higher share. So there's a range of large, mid, and small that we will maintain, but there will be not zero in any one cap curve at any point of time. That's the initial. So when you ask, the next question is the same percentage of funds subject to flexibility. The 100% of the funds are subject to flexibility, but at any point, I would say at least 5% or 7% would be there in each of the cap curve. So I would say 93% is probably the flexibility that you can expect, right? Somebody's asked me a question on what is the expected yield in 3 years. Now, typically, a Flexi Cap product is benchmarked against the NSE 500, which is the broad market index. So generally, the stock market is expected to grow along with the economy, especially with the nominal GDP growth of the economy. The last print, the current economic growth and GDP were roughly at about 6.5% each. So about 13% is the nominal growth of the economy expected in this year. And over the coming years, we would expect that to inch up slowly as the economy is now recovering from the COVID phase and the growth prospects look quite promising. So from that perspective, the stock market always tries to beat the nominal rate of return of the GDP, and fund managers try to beat the stock market's return. So I would say that as a target, we would definitely try to deliver something like a 3 to 4% alpha, as they call it, over the nominal GDP that the country will post. I can't give you an exact number of the yield, but you may track the nominal GDP and look at it broadly when the fund in terms of how it correlates with that performance, right? How is your Flexi Cap different from others, and how much time will it take to be at par with the existing Flexi Cap funds in terms of NAV? Now, obviously, our NAV would start at 10 and somebody else's NAV may be at 100. It doesn't mean that they're giving 10 times better returns than us, because they started long ago. So whether you're investing in a fund with an NAV at 100 or a fund with an NAV at 10, the returns that you will get will not be different based on the NAV that you enter at. It is like saying at Sensex at 3,000 and Sensex at 50,000, still people made the same amount of returns, right? Because it is just the weighted average of the prices of various stocks. So please do not look at the NAV as any kind of an indicator of saying that a fund with a higher NAV will give a better return or a fund with a higher NAV will give a lower return. Neither of which is true. All of the funds deployed in the market will buy stocks at the current prices of the market, whether it's a 100 rupee NAV fund or a 10 rupee NAV fund. And hence, the future fund management skills demonstrated by the fund managers will what is lead for one fund house giving superior returns over another, right? So you asked the question on how is your Flexi Cap fund different from others? The difference, I would say, is in the skill sets that come in. Sundaram as a fund house has been in India for 25 years. Over this period, we have managed a range of equity mutual funds. And for a long period of time, we have probably managed the longest surviving branded mid-cap fund in the country. And that strength of the mid-cap fund over its long-term performance, which is that a 10,000 rupee investment has multiplied more than 70 times, and a 5,000 rupee SIP in that fund, if you had started at launch, would have made you a crorepati today. So for a long period of time, the fund house has delivered a very strong kind of return over the mid-cap and small-cap space. And it is the research orientation of the fund house, the bottom-up approach to stock picking, looking at growth at a reasonable price when we buy stocks, and using a 6-pillar framework to actually identify which stocks to buy, which hallmark is the strength of our fund house. And essentially, the mid and small cap component is what we are trying to look at in a Flexi Cap portfolio. It will deliver the alpha over the coming years based on a solid bottom-up research-oriented approach for which Sundaram has been known for over 2 decades in this mutual fund industry. And hopefully, that's what I believe will help our Flexi Cap fund to be a star performer among all the other Flexi Cap funds in the marketplace, right? You asked what will be the investment strategy and how different from any balanced advantage fund. So the investment strategy of the fund is to be primarily an equity-oriented fund, right? So it will essentially be playing the risk-reward framework. As we know, equities carry a higher risk than debt, but they tend to give higher rewards. If you optimize the risk and reward, and that's why the tagline of our fund is optimizing opportunities, we believe that the equity markets in India are poised in an era of super growth that our country is going to see on the back of the demographic dividend that we have, on the opportunity from the China Plus One that's coming to India, and the overall positive outlook that foreign investors have on India, means the Indian economy is set for a strong growth path, and equities as an asset class is geared not only to deliver better than nominal GDP, but definitely far better than inflation. Whereas the balance advantage fund you have sought to have a comparison with is a blended product. It is meant for a more conservative investor where debt and equity are blended to give a more moderate risk reward option than the Flexi Cap. That's why the Flexi Cap is an aggressive risk fund, but it tries to manage that risk and reward to your benefit. Whereas a balance advantage fund, by switching out from equity when times are not good for equity, tries to blend the risk and reward. So naturally, when we talk about blending risk and reward, a balance advantage fund is taking less risk, and hence the potential reward also will tend to be less. Whereas the Flexi Cap fund, with taking more risk, will carry a higher risk in its portfolio, but also has a potential to deliver higher rewards when the economy and the markets do well. So I think that based on your risk profile, you should choose between a balance advantage kind of fund and a Flexi Cap fund. Flexi Cap will deliver better returns from a risk reward perspective over the medium term because it is geared to take more risk, but in a manageable way with expertise and diversification coming to its aid. So please take a call on your risk appetite. And if your risk appetite is oriented towards equities, then the Flexi Cap is an excellent choice for you. Is it varies from your other funds or other MF? Yes, it does vary from other funds, because SEBI has announced the categorization of mutual funds so that no one fund, one category is similar to another category. This category was missing in Sundaram's portfolio, and we are now filling up that category as a Flexi Cap. So hence, it is significantly different from the other funds in our fund house because we have funds in other categories which clearly the rules of the game are specified by the regulator in terms of how much in which cap curve or how much in which sector, which SEBI lays down in the categorizing circular, and we will be adhering to that. So Flexi Cap will be different from any of the other funds in our fund house. That being said, there are enough funds which are managed in a Flexi Cap style, which are there in our portfolio, but each of them would be managed by different fund managers. And hence the basic research that's available to all the fund managers from the analysts at the fund house, that stock selection will be available to all the fund managers to manage it. And hence you will see that this Flexi Cap fund could be significantly different from the other Flexi Cap style funds, which are managed in our fund house currently, right? Somebody says, I'm running 75. What judicious selection in this scheme to provide good returns? At 75, sir, I would say there is a thumb rule that you take 100 minus your age as your allocation to equities. So I would presume that in your portfolio, roughly 25% will be in equities. Of the 25% in equities, the Flexi Cap is an excellent way to take advantage of that, because an individually a small cap fund or a mid cap fund would be higher risk, whereas an individually a large cap fund would be a lower risk, but essentially then give you returns along the nominal growth of the country. So the blend of large, mid, and small, and since this fund is intended by us as an optimum risk reward management oriented fund and not a high risk taking high reward, the optimization will come to your aid in terms of that 25% of your portfolio can be very well allocated to this fund. Right? How much we expect return in the next 10 years? Well, expected returns are, this is not a guaranteed income product. So to that extent, as I mentioned in the beginning of my conversation today, nominal growth of India as a GDP, right, should be in the middle double digits. And any fund house through the equity markets try to beat the nominal GDP growth, and fund managers try to beat that. So I would say that over the long term, the Nifty, for example, has delivered 13 to 14% returns, and hence the fund would strive to better that in the coming decade. Unlike other companies, why Sundaram Finance is not attracted by many. I invested with the return was not satisfied. Will NFO is recommended by others with accidental reasons. So Sundaram Finance is in the business of lending and taking deposits. Sundaram Mutual Fund is what we are. And well, your statement is not accepted by many. I would like to say that we have 90 offices. We have over 2.5 million customers who have trusted us with their money across the length and breadth of the country. And I'm sure they've found that our performance overall has been attractive enough to help them generate returns. So I would recognize that fact for you and request that you also join the 2.5 million customer fold with us. And hopefully we will also deliver very satisfying inflation beating returns to you from our portfolio of products. Thank you. So do you think this Flexi will bring good returns about 13% after 3 years to me if I invest? Well, that is the intention. Like I said, a 13% is a nominal GDP growth of the country that is expected over the next 3 years easily. And the fund manager obviously will be attempting to beat that. So I would say that trying to give returns of about 13% over 3 years would be the basic goal of the fund manager. And hopefully we will succeed in that endeavor. And if we do not succeed, obviously we will consider that we did not do a good job. But it's our intention to do a good job and attempt to deliver better than nominal GDP growth of the country. What is the expense ratio and approximate return in 5 years? Again, these return questions keep coming up. I hopefully you've heard my answers prior to this. So I will duck that question at this point in time. The expense ratio of the fund depends on ultimately what the collections end up. My sense is that plus or minus 25 basis points this side of 2% is where. So it could be at about 175 or 150 depending on how much collections we achieve, because there's a graded style of expense ratio with the regulator has prescribed. So the more the success, the lower the expense ratio. Right now the fund is looking on a good wicket. Thank you for that. Your NFOs are coming with the time the Sensex is at a higher level. How will performance be in the coming years? Your diversified fund rocked well and enjoyed investing in it. So Sensex being at a high level is a function of the fact that the earnings growth of Indian corporates is at a high level. Over the last 4 years, corporate India has doubled its profits from 5 lakh crores to 10 lakh crores. So naturally, you would have expected the Sensex, even if the PE ratio remained the same, to double. And on top of it, you've seen that India has been a most attractive market for foreign portfolio investors, and they have been investing money now consistently. And hence, that is what has taken the Sensex up. What rocked the Sensex was the fact that oil prices went up, and hence India being an oil importing country, there was a perception that Indian economy and stock market would correct. That did not turn out to be true. Our economic numbers are coming out good, and our stock market also has delivered decent returns. To that extent, we expect that the resurgence of FII flows as oil price start to drop down over a medium term as the world economy kind of looking at a recessionary growth will be very positive for FII flows into India. And with the good earnings growth, as I said, about 13% is the nominal GDP growth, the stock market should be geared to deliver better than that. You would expect that the Sensex also to rise at the same level. So the high level of the Sensex at a nominal level of 50, 60,000 tends to make you think that it's expensive. But please realize that that is on the back of consistent earnings growth, which, as I mentioned, have doubled for corporate India over the last 4 years. So from that perspective, I would say that the level of the Sensex is not relevant. It is the future outlook of the economy, future outlook of the valuations, future outlook of FII investors coming into India, all of which are looking in pretty good terms. And I think that India is geared to be the fastest growing nation in the world, growing at probably double the rate of the world growth rate. So I would say that that should be the primary reason for you to consider equities as an asset class, and our fund will attempt to take advantage of the expected growth in the equities market, right? So that's where we expect the performance to be. Your diversified rocked well and enjoyed investing. Well, we hope the Flexi Cap fund also will rock well and you will enjoy investing in it. In this market condition, with the present inflation level, will this NFO succeed? So the question is that at this inflation level, I would encourage you to read an article of mine in the Business Line where I have explained that the inflation level in India is not high relative to what India has been experiencing over the past decade, number one. Number two is that India is a supply-driven economy, and a certain degree of inflation is essential to keep the wheels of the economy moving, because supply will not grow unless the future price increase grow. So the level of inflation in India, while it may seem similar to that in the US, there's a world of difference that this for India is not an inordinate amount of inflation. It's a decent amount of inflation. RBI is playing an excellent role in using interest rate hikes to keep that inflation moderate. We have a good monsoon outlook, which should also help the fact that almost 48% of our inflation basket comes from food. So that augurs well. Oil prices coming down augurs well. So overall, the inflation in India is definitely not a worry for us. And so at this inflation level also, we believe that the NFO will succeed in its ultimate goal. All the present Flexi Cap schemes of various fund houses are not doing good presently for the above said reason. I consider what you will do. So I would look at it this way, that a new fund offer always has the advantage of learning from the behavior of the past, the mistakes of the past, the success of the past. So with a fresh set of money at our disposal, we look at what other participants have been doing, and I think that learning will come in to help us to make a better projection of the portfolio. An existing Flexi Cap fund needs to reallocate by selling something to buy something. We are in a situation where you're ready to buy what looks promising and good to deliver good returns in the medium term. That's why I believe that our new fund offer is well timed in this situation when oil prices are headed down, Indian economic outlook is looking good, that it can pick the right growth stocks to deliver value to all the investors. How do you consider Flexi Cap to be better than other funds run by your organization? All the funds run by organization are our children. There are various fund managers dedicated to doing their performance well. As a management, we are here to give them equal support. Let's like all the children, right, are given the same educational support by parents. Which student turns out to be a star student in whom an average is a function of the student's work. So I would not say that this Flexi Cap will do better than my existing funds. Each fund is geared to a certain risk profile, to a type of investor and a type of goals that they have. And I would encourage you to look at the Flexi Cap as something that has the best of all worlds, which is the best of the large cap, best of mid cap, best of small cap, best of the various sectors, and starting from a fresh plate. So to that extent, the Flexi Cap, I would say, is that it's got the advantage of having a fresh set of cash to dispose into the market at absolutely the right time. But that being said, depending on your risk profile and your outlook, you can look at the fund houses, other funds also, and it's not that we favor one fund over the other to give better returns than the other. If it's better to do an SIP or bulk investment in this Flexi Cap fund, see, it depends on the source of your income. If you are a regular income provider, like a salaried person, or depends on rental for their income, your income is monthly, you can invest it monthly, right? SIP should not be a tactical tool to say market is expensive, shall I stagger? Market is volatile, shall I stagger? That's more of an STP where you park the money into liquid and maybe spread it over, right? But like I just been explaining, right, while the Sensex seems to be at a nominally high level, the fact of the matter, India's growth story augurs well for the EPS growth of companies in the stock market and hence good returns. So I would say that doing a lump sum investment in the Flexi Cap NFO would be a good option if you have the money. If you have the money, there's no need to split it up into an SIP and put it in the fund. You can put it in a lump sum into the fund. However, if you're looking as somebody who wants to get their monthly salary income or proportion of his savings into a good performing expected fund, then you can look at the SIP option. as part of that kind of an allocation, right? In view of the high risk rating of the NFO, we suggest investment by senior citizen whose short-term objective for investment in the average return on investment range of 8% to no. I would not recommend this for you if that is your stated goal, sir. As a senior citizen who is looking at a short-term objective, the Flexi Cap fund is meant for a longer-term objective. So it's not a short-term objective fund. Second is, if you are as a senior citizen expecting to meet your living expenses from your savings from a regular return, this is not the product that is meant for that purpose. So this is a long-term wealth creation product. It is not meant for a short-term where your money is needed by you for your living expenses or to meet certain short-term needs. And equity market itself is not the right place to park your funds. You should look at equity savings funds or short-term debt funds as a better allocation for your money rather than to look at the risk. And as you mentioned, this is indeed a high risk rating fund because it concentrates its portfolio in equities all the time. Right, sir? So what are the benefits of Flexi Cap fund? That is, one, how this fund is better than other Flexi Cap funds. Since the fund is going to start, what will be the initial cost for investors? It will not be wise to invest in already successful fund. I think the first question I've already answered in terms of other Flexi Cap funds. The second question in terms of it's going to start, the initial cost is 10 rupees for you. And like I said, it's a fresh pool of money waiting to be allocated. So whether you invest in a 10 rupee fund or a 100 rupee NAV fund, it shouldn't make a difference to you. You should choose a fund which will deliver good returns. And we do believe that the Flexi Cap fund by Sundaram will deliver good returns in the future. And so from that point of view, it's worth it as an investment in your portfolio. So, sir, I have 20,000 rupees Flexi Cap में invest करना है तो वो lump sum mode में करूँ या SIP में करूँ? Please advise, sir. I answer this question in English, but since आपने हिंदी में पूछा, मैं हिंदी में आपको जवाब दे देता हूँ कि पैसा अगर हाथ में है 20,000 तो उसको लमसम के तरीके ही आप निवेश कीजिए, उसको स्प्लिट करके SIP के रूप में करने की जरूरत नहीं है. इन लमसम ही आपको अच्छा रिटर्न दिलवा सकता है क्योंकि अब इन्वेस्ट करने के लिए वक्त सही है इंडियन स्टॉक मार्केट में. यही हमारी ओपिनियन है, इसलिए हम इस वक्त पर इस फंड को ला रहे हैं एज अ न्यू फंड ऑफर. तो आप जरूर लमसम के जरिए इसमें निवेश कर सकते हैं. So why your funds in the current maze of similar ones from almost all other fund house? Well, sir, the regulator is basically trying to make the industry more even so that people can compare across fund houses. The skill of the fund houses comes if you have all funds in the similar categories. So I think while it seems like a maze to you, each fund in your category, if you compare, the better quality fund house will always deliver better quality returns. And it is our hope that we will turn out to be one of those better quality return giving fund houses. So what separates your fund house apart? I think I explained this in some minutes ago to say that it's a long years of experience around managing mid and small caps. It's our research-oriented approach, our buying growth at a reasonable price, and our six-pillar investment philosophy, which we use to select stocks, bound by a solid economist and research-based approach that we bring to the table. So this is what sets a fund house apart from the other fund houses in the industry. Isn't investing in 55 stocks just kills NAV with a couple of stocks moving in opposite directions? So when you say a couple of stocks moving in opposite directions, 55, 60 stocks, I think that's good enough to cover for that diversification. I think 55 to 60 stocks is an ideal kind of diversified equity portfolio. The number of stocks that should be there, I think is pretty much ideal. If you can't balloon it to over 100, or if you take 20, 30 stocks, is more concentrated, then high risk, high reward bets tend to pay off or to not pay off. So I think 55, 65, we feel is just right as an allocation to deliver the benefits of diversification, at the same time have the expertise of stock picking come and deliver alpha. In the times that mid-cap was ruling the roost, what made you think you should go for Flexi Cap? Is it the right time? Would you be focusing on sunrise sectors? Let me answer the last question. Sunrise sectors, yes, definitely would form a part of the themes that we will look at in this portfolio. You mentioned that mid-caps are ruling the roost. So I would encourage you to look at the fact that past performance is not a good predictor of future performance. So most recently, if there is money flowing into mid-cap, they're doing well, doesn't mean in the future they will do well. With the expected return of FIIs, I expect large caps to get support. So for some period of time, large caps will do well. In the medium term growth of our country, the domestic stocks of the small cap tend to benefit from the growth of the country far better than large caps and mid caps. So over the medium term, small cap also will do well. So the idea of this fund is that with mid caps continue to do well, we will take advantage of that. FII return will give support to large cap, will take advantage of that. The medium-term growth of the economy will support small caps, will take advantage of that. And essentially the filter here is to pick the right sectors, which are going to be the growth sectors. So to that extent, I would say that while you may, as an individual investor, have some allocation to large cap, mid cap, small cap, you may choose to give higher to mid cap if you feel that mid caps are ruling the roost. Here, the fund manager will take a call on how much to put on mid caps, not just based on the past performance of the mid cap stocks or the segment, but on the future expected performance, which is what the 1 year forward PE says. And so that's arguably a better method of selecting, because that which goes up has to come down and that which went down has to go up. So selecting the right timing to pick something that is going up is where all the expertise and skill set of a fund manager comes to play, which we hope to deploy in this fund on your behalf. Is Sundaram small cap fund not a better return? Same, similar to the mid cap fund. Like I said, return giver, if you take a time frame, so in different time frames, different cap curves will give you better returns. But if you are generally a longer term investor, you need to be flexible that there is a time for large cap, a time for mid cap, there's a time for small cap. Blending these together, that flexibility is what Flexi Cap funds get. And when you use expertise and diversification to do that, you make sure that you minimize your losses and maximize the gains to that extent. So it's a risk reward play. In small cap, you are playing the risk and you hope to get the reward, but risk cuts both ways. Whereas in a flexi cap, when small cap is seeming like the risk reward is not in its favor, it'll reduce the small cap exposure. When it feels that small caps are going to give you better reward for the risk taken, it will increase the exposure. So that flexibility backed by research and expertise is what this fund will try to give to you. So I would recognize that if you want to have a small portion of small cap in your portfolio as part of large cap and mid cap, that's one way to go. But giving this as a flexi cap allocation to Sundaram will mean that you are diverting and you are delegating that right to choose, the power to choose how much in which cap to Sundaram, and we hopefully will bring our research to your advantage in that way. So I would say that you should give a chance to the Sundaram Flexi Cap Fund, make an allocation to that so that you can yourself see the difference over different periods of time. So the final question, which is there from the historic question that we've got, says that the same flex cap schemes on the market, why you're starting same scheme, or the difference between your scheme and other schemes. I think I've answered that in fair bit of detail to say that every fund house will try to have funds in every category. That's what attempt. We didn't have a flexi cap fund. We will try to do. Skill sets in managing flexi cap come from skill sets in managing large cap, skill set in managing mid cap, managing small cap. Sundaram carries a long years of experience in managing mid cap, small cap, and even micro cap kind of funds. We hope to bring that advantage to our flexi cap fund and hopefully deliver a better return to you over the medium term, over inflation and over the broad market. Thank you. That was the list of questions that people had in advance given to us. My team will now put across those questions, which during the course of the last 20 minutes, you have been posting on the chats. So yes, team, you can go shoot.
Please tell us about Flexi Cap fund managers and their expertise in managing Flexi Cap.
So the two fund managers for the Flexi Cap fund are Mr. Ravi Gopalakrishnan, who is also the CIO equity for our fund house, and Mr. Sudhir Kedia, who carries multiple years of experience with Principal Mutual Fund, with ASK investment managers, and with Mire Mutual Fund. So they come with a lot of experience. Mr. Ravi Gopalakrishnan carries 30 years of experience as a fund manager. He has also successfully managed what was known as the Principal Emerging Blue Chip Fund, which is a large and mid-cap fund, which has been among the best performing funds in the industry. It is subsequently now merged into the large and mid-cap fund, and it's called now the Sundaram Large and Mid-Cap Fund. So they bring years of experience. Mr. Sudhir Kedia, who currently manages our large cap fund, has also been an experienced fund manager, and both of them have a skill sets across large, mid, and small. Mr. Ravi Gopalakrishnan currently manages a small cap fund in addition to the large and mid cap fund, and he also manages a flexi cap style fund, which is the Sundaram Focus Fund. So he carries experience in the relevant area. Similarly, Mr. Sudhir Kedia manages a Sundaram Tax Saving Fund, which has also not got any restrictions on cap curve. So it's a flexi cap style fund, and he also manages the large cap fund. So as you can see, they come with the experience of managing funds across the cap curve, both those fund managers. So they're experienced fund managers with very good track records, and I'm sure they will bring that skill to the table in trying to deliver better returns for you.
The next question, sir. What is the average percentage of cash this mutual fund will have?
So it is our policy of a fund house that an investor trusts us with his money for investing in equity markets and not to play a cash balance game. So to that extent, broadly, we will try and keep cash to less than 5%. In sometimes we may, based on the inflows, keep up to 5% in cash. But otherwise, as a philosophy, we believe that investor has given us the money to deploy into the equity markets to deliver returns.
The next one, sir. This fund seems to hold as much as 75 stocks. There is not too much diversification.
When you consider the fact that in the case of small caps, right, in the high risk, high reward segment, you will tend to have a larger number of stocks in order to diversify your risk, right? If this was a pure large cap fund, we could have lived with 15, 20 lesser stocks. But because it's a large, mid and small cap fund, in the smaller stocks, because they are higher risk, it doesn't make an optimum risk reward equation to put your bets on a few stocks. So the research will be recommending a number of stocks, and taking a small portion of each of these means that ultimately even 3 or 4 of them turn out to be a true winner. They will add value to the portfolio. So I think when you have a flexi cap, like the number of stocks in the smaller end of the cap curve, it's important to diversify, because as you know, smaller companies are higher risk, but when risk works right, the rewards are also higher. So I think diversification at the lower end of the cap curve is critical to keep a little more of stocks. And that's why the Flexi Cap fund will have something like a 70 stock also at times if necessary.
The next one, sir. Many AMCs invest in their parent company, but Sundaram AMC seems an exception. We decided not to hold stake in Sundaram Finance. Why so?
It's just an internal policy from a corporate governance perspective. We do not want the perception that Sundaram Mutual Fund is being used to manage the stock price of the parent. As you know, that's from a philosophy and the value system of Sundaram. We believe that justice must not only be done, but be seen to be done. Similarly, actions should not only be in the right spirit, but should be demonstrated and seen to be in the right spirit. That's the reason we have taken an internal policy decision that we will not invest in the stocks of our parent company.
Next one, sir. After the principal acquisition, how is the research team synced with Sundaram AMC? Are you planning to add more people into the core research team?
So the research team essentially consists of fund managers plus an economist plus a set of analysts. So we have absorbed the team by and large from principal across analysts and fund managers, and we feel that the combined team is adequately equipped to manage the entire portfolio with us. So while we will always look at strengthening the analyst team, because research is the foundation of our fund houses ethos in managing funds, we will constantly look to add research analysts for covering various sectors as much as possible. But as far as fund management team is concerned, we believe that we are fairly rightly stocked at this point in time, and we have adequate fund managers with a good amount of experience in managing a reasonable amount of funds. So we don't feel any fund manager has a absolutely too high a number of funds or value of funds to manage, that he's out of stretched in terms of his expertise or in terms of his abilities. So to that extent, we feel we are really recently right-sized in the fund management team, but on the research team, we will, as we expand, as new age sectors come into play, we will definitely look at opportunities to expand the research team to the extent that we need them as a support on the overall stock universe identification for our company.
The last one, sir. What is the fund size that you are targeting in this NFO?
Well, being that it's a flexi cap fund, I think given that it is a mix of large, mid, and small, I think there's an unlimited amount of capital that we can take and deploy into the markets without our movement coming in and shaking the markets. So if I was in a small cap fund, I would say, yes, I don't want more than this much money. If I was a mid cap fund, I would say, yes, I don't want so much than this much money. But as a flexi cap fund, I'm happy to take as much as the investors can trust in us and provide us with the money to manage. So I would welcome the fund to be limitless in terms of the amounts that we collect. Thank you.
We got one more.
Okay.
How's the initial allocation of funds in large, mid, and small cap?
So at this point in time, one of the key things in the allocation, somebody asked this question earlier also. I should mention that broadly our range of large caps are going to be between 50 to 80%, unless there are extreme circumstances. So from that point of view, the reason for that also is that we won't generally take large caps less than 50% is because the benchmark for the fund, the NSE 500, carries 78% of large cap stocks in its portfolio. So we have to keep one eye, because ultimately the promise from Sundaram to the investors is that we will try and beat the benchmark to the fund. The benchmark, it's carrying 78%. For us to take a bet out of the benchmark's allocation, which is less than 80% of large caps, means that we have to pick those which will outperform, right? So at this point in time, right, the initial allocation, the way it's looking at, right, I would say arguably somewhere between 50 to 65% would be in the large cap space. And as the Indian economy's growth story unfold, we would probably look at gradually increasing the mid and small cap portion to a significantly higher level. So ballpark, I would say, though ultimately, as a CEO, I don't get down and lay down the rule to my fund managers. The fund managers are closer to the ground, have the benefit of research and ongoing news about what's happening. So they would take the actually accurate call based on that. That amount of flexibility we do empower our fund managers with. Thank you. One more question. Yes, please.
Is Sundaram Flexi Cap launch a part of the flagship fund group offered by Sundaram AMC?
Absolutely. I think that is a very nice question to ask, because historically, as the fund house has been associated with the mid cap, because that's where we demonstrated our value over a fairly long period of time. But mid caps as a proportion of the market are probably in the double digits, right? So naturally, we have more than 2.5 million customers who have trusted their money with us, but their exposure to Sundaram has been largely in the mid and small cap oriented space. We've been changing this over a period of time through launches in the large cap, the multi cap, and the balanced advantage space. But obviously, as the fastest growing segment of the market is the Flexi Cap, and it's the ideal for an investor to delegate asset allocation to the fund house, we do see that over a period of the next 5 to 10 years, we would like the Flexi Cap to be rivaling our mid cap as the flagship scheme of our fund house. Mid cap being what we are already associated with, naturally will carry top of mind and heart at our end. But the Flexi Cap is where we believe that investors would be less subject to the volatility of a mid cap as a segment and have a smoother journey in the wealth creation journey. So to that extent, yes, I see the Flexi Cap as emerging as one of our flagship schemes over the next decade.
The next question, sir, we received it in Hindi. By what percentage does corruption depress India's GDP growth, and by what percentage does it increase inflation?
Well, corruption की बात करें भाई साहब, तो बात ऐसी है, corruption obviously एक नॉन फॉर्मल इकोनॉमी, नॉन अकाउंटेड इकोनॉमी में आती है, राइट? काला पैसा, काला धन जिसको कहते हैं। तो करप्शन जो आती है, तो एक तरफ डिमांड को भयंकर बूस्ट देती है, क्योंकि कैश बेस्ड परचेज जो आते हैं तो बढ़ते हैं, और तो इसके लिए नेचुरली करप्शन ज्यादा है तो इन्फ्लेशन तो बढ़ेगी क्योंकि डिमांड बढ़ती है। मगर एट द सेम टाइम गवर्नमेंट भी बहुत जबरदस्त कोशिश कर रही है कि करप्शन को कम करा दे, मिनिमाइज करा दे, और ये गवर्नमेंट की इलेक्शन की एजेंडा हुई थी। तो हमें उम्मीद है कि करप्शन डिमोनेटाइजेशन स्कीम के जरिए और इसके जरिए कोशिश हो रही है करप्शन को कम कराने के लिए। मगर ओवरऑल अल्टीमेटली करप्शन है तो समझिए कि इकोनॉमी में कुछ ग्रोथ है, तो इसके कारण ही लीकेज हो रहा है। तो गवर्नमेंट की टैक्स रेवेन्यू घटेगी, क्योंकि अगर करप्शन है तो उतना तक टैक्स नहीं भरेगा। तो गवर्नमेंट की इकोनॉमी की हालत के लिए अच्छी चीज नहीं है फ्रॉम अ फिजिकल सिचुएशन, बट वैसे तो वो पैसे को खर्चा होना ही है, नहीं तो बैंक लैकर में पड़ गया तो वो किसी काम का नहीं होता है। तो करप्शन वाला पैसा जो सर्कुलेशन में आता है वो इन्फ्लेशन को भी बढ़ाता है, ग्रोथ को भी बढ़ाता है। करप्शन वाला पैसा जो लॉकर में बैठता है कैश के जरिए, वो इकोनॉमी से बाहर है, और जरूर गवर्नमेंट की इनकम कम होती है जितना तक करप्शन ज्यादा होती है। इसलिए गवर्नमेंट की कोशिश भी है कि करप्शन कम करा दे। मगर ये सब हवा में बात है कि करप्शन कितना है, कितना काला धन है, ये तो किसी को एक्यूरेट डेटा नहीं मिलता है। तो मेरी उम्मीद है कि ओवर अ पीरियड ऑफ टाइम जरूर हमारे देश में करप्शन कम होगा, और ये अच्छी चीज होगी गवर्नमेंट की फिजिकल सिचुएशन के लिए भी और हमारी इकोनॉमी के लिए।
That was our last question. Thank you.
Right, very good. Thank you very, very much. It's been a good, engaging 40 minutes of your questions, and I think that hopefully I've given you a lot of clarity, and I do expect your support to this NFO. The NFO closes on the 30th of August, so there is just a few minutes to go. So if you have been thinking about it and you ask these questions prior to taking a decision, I trust that I helped you in the decision-making process. I would encourage you to go and talk to your advisors or to your mutual fund distributor urgently and quickly. and make sure that you make your application for investment before the 30th of August. Thank you. Wish you all the very, very best and happy investing from us.